Last year was a record year for gold demand, and that's reflected in gold's price performance. Gold was up 26% over the year. We had 40 record highs, and as you said, a lot of that was to do with central bank activity. They have, for the last 3 years, bought over 1,000 tons of gold, so very, very significant quantities of gold. But the other driver was investment demand, and that was up by about 25% over the course of the year. That was driven by institutional investors across the world, but especially in Western markets. So in the second half of last year, we saw renewed institutional interest in gold. The other component of demand to think about is jewelry. Because of those high prices, we actually saw a decline in jewelry demand.
What was interesting as well is the demand from the technology sector in order to fuel maybe the infrastructure for AI. So can you tell us a little bit more about that kind of demand?
This is a very interesting component of demand because gold is also a commodity, not just an investment asset. Around about 7% of demand annually is from technology. It's used in LEDs, it's used in high-end electronics, it's used in medical devices. We've seen fairly robust growth in technology demand. As you say, part of that is the requirement for high-end chips to support AI developments, and that is being fueled by rising economic growth.
And you expect this demand from the technology sector to persist in 2025?
We do, yeah. Although it's a small component of gold demand, as I said, it's about 7% of demand for gold. It's an area that is growing, and we expect it to grow even further, partly supported by the energy transition, which is continuing. Gold is used in lots of environmentally friendly technologies, for example, but also the AI revolution.
Obviously, central bank buying fueled a lot of the demand last year. So which central banks were responsible for the spike in demand in 2024, and do you expect this trend to continue this year?
The central bank interest in gold is very, very interesting. Central banks account for about 20% of demand for gold every year. They're driven by lots of factors: economic uncertainty, geopolitical risk, the need for a safe haven. That's likely to continue. Now, we run an annual survey of central banks. We last undertook this in July last year. And the sentiment from that survey, our survey of central banks, was very, very positive. 81% of central banks thought that gold is going to play an increased role in reserves. So we expect that to continue this year because the macroeconomic and the geopolitical situation is quite uncertain, and central banks are likely to continue to need access to a liquid asset, an asset that can outperform and protect wealth, and also that's considered a safe haven. It's a variety of central banks that are interested in gold. A lot of the interest, certainly since 2010, has been from emerging market central banks, but last year Bank of Poland, Central Bank of Turkey, the PBOC, RBI were all fairly robust buyers of gold.
As you mentioned, the gold prices hit 40 record highs in 2024, and they continue to do so in 2025. Do you expect this upward trend to continue this year?
Yeah, as you say, this year has been pretty good so far. We've seen 4 all-time highs just in the last 4 or 5 weeks, the first weeks of this year. Lots of issues are driving that. What's happening in the States, certainly the threat of tariffs, which are likely to be inflationary. That is certainly supporting the need for a risk-off asset, a safe haven asset, and gold certainly benefiting from that. That general economic, trade, political uncertainty is a big factor when it comes to gold demand, and that's likely to persist this year. The other factor that we haven't spoken about is broader macroeconomic policy, interest rates. We saw interest rate cuts, the cutting cycle start last year, and that was a big catalyst for institutional investment in gold. That cycle is continuing this year, perhaps at a slower pace than we initially thought, but as interest rates still start to come down, but also there's an eye on inflation, we're likely to see continued interest in gold, and that's likely to be supportive of gold's performance this year.
What about supply? We spoke about all the demand, but is the supply able to keep up with this demand?
It is, and one of the reasons why gold is a unique asset is because there's a couple of components to supply. You've got mine supply, so new gold coming onto the market for the first time, but you also have a very significant component of recycling. So people selling their jewelry back, old bars and coins, industrial scrap and e-waste. That accounts for about a quarter of supply in an average year. And that's been very robust. So when prices are as high as they are, you do see some selling, especially from the jewelry consuming markets. because people want to lock in those high prices. And so even though demand is increasing, it's very difficult for mine supply to keep up with that, because mines take 10, 15 years to come onto line, big capital expenditure. Recycling meets some of that slack. So when the price is high, you see more recycling, and that meets some of that extra demand.